Welcome to this week 19 swing trading analysis video. In this video, I'm going to analyze the best catalyst-based swing opportunities of week 19, 2025 and dissect their catalysts. If you're new here, I'm sharing my journey learning trading, focusing on catalyst-based day trading, especially in the pre-market, and catalyst-based swing trading, and I'm looking to develop an edge over news and catalyst. And so if this is something that interests you, consider subscribing and hitting the notification bell. The first stock we're going to look into is LYFT, which is a ride-sharing platform and a competitor to Uber. And so LYFT reported their earnings and financial results for Q1 on the 8th of May after hours. And these results were very strong, but we're going to look into the details of why they were very good results. Let's open the article there. Okay, so these bullet headlines say, okay, strongest start of the year ever with record Q1 gross bookings and active riders, growth accelerating, cash flow generation approaching 1 billion for trailing 12 months, and increasing share repurchase program to $750 million. Okay, so it says here, I think there is, okay, so here are the key numbers. For the first quarter 2025, LYFT reported gross bookings of $4.2 billion. It's the growth year over year that's actually important. So 13% year over year growth, revenue of $1.5 billion, 14% year over year, and net income, which was a loss of 2.6 million compared to 31.5 million. Just not sure about these numbers, but it just says there that, the net income improved essentially compared to Q1 2024, an adjusted EBITDA of 106.5 million compared to 59.4 million year over year, Q1 2024, and net cash provided by operating activities of 287.2 million compared to 156.2 million of Q1 2024. So this is also very, very good. Free cash flows of 280 million compared to 127 million Q1 2024. Okay, and in terms of operational numbers, so rides grew 16%, so this is another growth number, very nice, 16% year over year. Active riders growth accelerated to 11% year over year. And then they're talking about driver production innovation, so some innovation, AI related innovation. Last week we began piloting Earnings Assistant, an industry first tool powered by AI. So that's an innovation, very good for future prospects. And then something else, rider product innovation. And then the share repurchase program, which is also a very positive. The board of directors has authorized a share repurchase program of $750 million. And then a very strong quarter, second quarter outlook 2025. So they're expecting rides to grow in the mid-teens year over year. They say driven by industry-leading service levels and strong rider and driver engagement. Okay, they are expecting gross bookings of approximately 4.41 billion to 57 billion, up 10 to 14% year over year. That's a very good outlook as well, and a good adjusted EBITDA of approximately 115 to 130 million, and adjusted EBITDA margin of 2.6 to 2.8%. So we're looking at the 1 minute chart of LYFT here. And as you can see, the immediate reaction to earnings that were announced right after the market closed on the 8th of May, the immediate reaction was very positive. The stock rallied. Then it pulled back a little bit, but not such a dramatic pullback, to be honest. And then it continued the session, the after hour session, just going sideways. And then the next day, the pre-market session, it actually continued going up, gapped up a little bit, goes sideways. So the stock is opening on the 9th of May, gapping up. Let's see how much was the gap here. That's a nearly 13% gap up. So, and it just continued rallying throughout the session of the 9th of May. And so it went, I'd say actually a bit more than 8%. Let me just do that again. From here, yeah, I'd say more like 13% gain during market hours of the 9th of May. So that's a pretty nice. So actually, if you look here on the daily chart, it'll tell you 28%, but that's because it's counting the gap up. But realistically, you would not have caught the gap up unless you were trading pre-hours. You would have caught maybe part of it, or even if you were holding the stock before. But if not, then yeah, you would have just got maybe this this rally here. And so this has offered a nice swing opportunity. It's a small swing. It's 2-day swing. Let's see, from here to here, that's 18% swing. That's not the most dramatic move, of course, but it's still very decent. The thing is, a few days later, the stock has broken down, especially here on the 15th of May. And so I think the market maybe has some concerns, some reservations about the stock. The results were good, but there could be some reservations about maybe competition, maybe global economy slowing down, maybe other reasons. But anyways, the stock is reacting after this initial positive reaction a little bit negatively and breaking down. So we're gonna see what's gonna happen with this stock. But I mean, if you have caught just that small swing of 2 days, it would have been a very nice 18% return. Okay, so just to do a little recap of the key points that got the stock price to go higher for LYFT. So there were some key metrics that saw a growth year over year. Gross bookings, 13% increase year over year. Revenue, 14% year over year. Net income, same, increased from a loss of 31.5 to a loss of 2.6. Adjusted EBITDA, same growth from 59.4 to 106.5 million, and free cash flow increasing to 280 million compared to 127 million, so more than double. Same story about the operational highlights. Number of rides increasing 16% year over year, active riders increasing 11% year over year, and some innovation, driver tool, AI powered driver tools and new services. And the last point was also the share repurchase program announcement of a total of $750 million. The next stock we're going to look at is Bros. So Bros had earnings reported on the 7th of May after hours. It reported very strong financial results. Let's look into the details of why these results were very good. So Dutch Bros reports Q1, first quarter 2025. So here in the bullet headlines, it says that it achieved a revenue growth of 29% in the first quarter. It achieved some sales growth as well, delivers 4.7 system and 6.9 company operated same shop sales growth, and continues momentum with another quarter of positive transaction growth. I think there is further details of, so the first quarter 2025 highlights. So Bros opened 30 new shops, 25 of which were company operated across 11 states. So that's a growth in terms of their shops. Total revenue also grew 29%. The detail is 355 million compared to 275 in the same period last year. And here it reiterates the system same shop sales and transactions increased by 4.7 and 1.3% respectively relative to last year. And same story, company operated same shop sales and transaction increased by 6.9 and 3.7. So there is growth here as well. Company operated shop revenue increased 31% in this compared to the same period last year, so year over year. Company operated shop gross profit was 71.5 million as compared to 54.3 million in the same period last year. Okay, operated shop gross margin, which include, I don't know, okay. Company operated shop contribution, that's more financial details. And selling, general and administrative expenses. So they're talking about some expenses here, roughly staying the same, I guess. Well, not exactly actually. 58.9 million as compared to 46.2 million. So yeah, not exactly the same, but the previous results are very good. The growth in terms of revenue, in terms of sales, in terms of earnings, that's very, very good. All the rest is all the small details. Okay, so adjusted sales general net income, the very strong net income as well, 22.5 million as compared to 16.2 in the same period last year. That's also very good. Adjusted EBITDA growing 19.7%. Adjusted net income, so 24.8 million as compared to 16.5 million. Net income per share was 13 cents a share as compared to 8 cents a share same period last year. And lastly, adjusted net. And then it goes to give some guidance for 2025. So it says, given the strong performance in the first quarter and continued momentum into the second quarter, 2025 total revenue, system same shop sales growth, and adjusted EBITDA are trending towards the top half of the previously communicated ranges below. So they are given the following guidance: total revenue estimated at 1.5 billion and 1.575 billion. And then same shop sales growth is estimated to be in the range of 2 to 4%. Adjusted EBITDA estimated to be between 265 million to 275 million, which assumes the impact of elevated coffee costs, partially offset by approximately 9 basis points of adjusted SG&A leverage year over year. Total system shop opening in 2025 are estimated to be at least 160, so they're maintaining an outlook of opening at least 160. Is it opening? Maintaining 160 shops. Very good outlook anyways. Capital expenditures are estimated to be between 240 million to 260 million. Okay, same shop. And then see if there's something else. So all in all, very, very good results and very good outlook for the remaining of 2025. So now let's look at the market reaction and how the stock reacted to these results. Okay, so on the day of the announcement, as you can see, the stock reacted by rallying into these earnings. After the earnings were announced, but it was on very, very light volume. So it is an indication of how the market kind of feels about, or some market participants anyway, feels about these results. But then just went sideways, went down a little bit, very, very light participation here in the after hours and the pre-market session. So the real reaction is to be assessed at the market open or after the market open next day. And as you can see, on that particular day, the stock actually went up by 8.8 8%. But then this was the catalyst for a multi-day swing of 22%, and it can still continue a little bit higher, because yeah, this has been just 7 days, including a weekend. So okay, so just to recap the different points that were the catalyst for this move. Bros reported very strong financial performance, the revenue growth of 29%, same shop sales, system-wide same shop sales grew by 4.7%, and company operated locations by 6.9%. And both these had positive transaction growth, indicating a very strong customer demand. Net income and earnings were also very good. And in terms of operational highlights, the store expansion, the company was announced opening 30 new shops during the quarter, including 25 company operated locations across 11 states. And then the outlook for 2025 that Bros gave was also very good. Revenue guidance of 1.55 billion to 1.575 billion. Same shop sales growth as well, expected to be between 2% to 4%, and maintaining store opening target of at least 160 shops. My personal takeaway is that financial results do matter, but also operational results, customer engagement, and the outlook is as important when it comes to how the market views and reacts to a particular stock. I hope you guys enjoyed this video. As always, please give me a like, share, subscribe, and thank you for watching.